Today, we're diving deep into the world of Bitcoin, specifically the idea that it might be a better fit for your long-term investment portfolio than a short-term trading frenzy. Bitcoin, the world's first and most well-known cryptocurrency, is a good place to start for individuals who are new to the cryptocurrency field. It functions on a decentralized network, which means that it is not under the jurisdiction of any government or central bank. A public ledger known as the blockchain is used to record transactions, which ensures both transparency and security among the transactions. An equal amount of excitement and skepticism has been expressed in response to the idea of Bitcoin. While there are those who consider it to be a revolutionary financial tool, there are others who continue to be apprehensive of its volatility. If there is one thing that is certain, it is that Bitcoin has captivated the interest of investors all around the world. In the following video, we will discuss the various reasons why Bitcoin may be the most suitable asset for a long-term investment. Over the course of our conversation, we will talk about its potential for growth, its distinctive qualities, how it compares to traditional assets, and the risks that are associated. You will have a better grasp of whether or not Bitcoin is a suitable investing plan for the long run by the end of this video. The case for long-term investment. Let's address the elephant in the room first. The variations in the price of Bitcoin can be rather extreme. We've witnessed it reach record highs, then drop just as fast after reaching those highs. Short-term traders may experience mental anguish as a result of this volatility, which may cause them to make rash choices based on fluctuations in the market. Nevertheless, when you take a more long-term perspective, the significance of these changes in the near term becomes less significant. Instead of focusing on days or weeks, you are concentrating on Bitcoin's potential to increase in value over the course of years or even decades. Thinking like a pioneer. Think about what it would be like if you were able to make an investment in the early days of the internet. At that time, the technology was in its infancy, and the impact it would have in the future was undetermined. On the other hand, the payout was enormous for those individuals who did not sell their investments. Bitcoin can be compared to the early days of the internet. It is a new technology that has the potential to cause disruption in the conventional business and financial institutions. Nevertheless, it is still in the preliminary stages of its development. If you keep Bitcoin for an extended period of time, you are essentially becoming an early adopter of the cryptocurrency. You are placing a wager on the future of this technology and the potential it has to transform the way in which we deal with monetary matters. Limited supply, a scarce asset. Due to the fact that there is a limited supply of Bitcoin, it is one of the primary characteristics that makes it appealing to long-term investors. There will never be more than 21 million Bitcoins in circulation, in contrast to other currencies, which governments have the ability to produce at will. Because of this scarcity, there is a feeling of value. It is possible that the price of Bitcoin will grow due to the fact that there is a limited quantity of the cryptocurrency. It is comparable to a rare collectible, if you will. An item's value increases over time in proportion to the degree to which it is a limited edition. Hedge against inflation. The purchasing power of traditional currencies decreases over time because they are prone to inflation, which means that they lose value over time. It is possible for governments to print additional money, which results in a decrease in the value of the currency units that are already in circulation. The cryptocurrency known as Bitcoin, on the other hand, is intended to be resistant to inflation. Because of its limited supply and decentralized character, it has the potential to act as a hedge against inflation for investors. If you include Bitcoin in your investment portfolio, you may be able to shield your money from the deteriorating impacts of inflation over the course of a longer period of time. The power of decentralization. As mentioned earlier, Bitcoin operates on a decentralized network. This means there's no central authority controlling its issuance or transactions. Everything is transparent and recorded on the blockchain, a public ledger accessible to anyone. This decentralization offers several advantages for long-term investors. Reduced counterparty risk. Unlike traditional investments where you rely on a third party, like a bank, to fulfill their obligations, Bitcoin eliminates this risk. You have complete control over your holdings thanks to the self-custody nature of crypto wallets. Increased transparency. Every Bitcoin transaction is recorded on the blockchain, providing a clear audit trail. This transparency can be appealing to investors who value security and immutability in their investments. Potential for global adoption. The decentralized nature of Bitcoin makes it accessible to anyone with an internet connection, regardless of location or financial standing. This global reach could fuel its adoption and potentially drive up its value in the long run. Comparing Bitcoin to traditional assets. Now let's compare Bitcoin to some traditional investment options to understand its potential role in a diversified portfolio. Stocks. Stocks represent ownership in a company, and their value is tied to the company's performance. While stocks can offer significant growth potential, they are also susceptible to market fluctuations and economic downturns. Bonds. Bonds are essentially loans you make to a government or corporation. They offer a fixed income stream, but typically have lower growth potential compared to stocks. Real estate. Real estate can be a valuable asset class, offering rental income and potential appreciation in value. However, real estate requires significant upfront investment and ongoing management responsibilities. Bitcoin's unique proposition. Bitcoin offers a unique proposition compared to these traditional assets. High growth potential. While Bitcoin's price is volatile, its potential for long-term growth is significant, especially considering its limited supply and growing adoption. Diversification. Adding Bitcoin to your portfolio can provide diversification, potentially reducing overall portfolio risk. Bitcoin's price movements often have a low correlation with traditional assets, offering a hedge against market downturns. Accessibility. Compared to real estate or starting a business, Bitcoin offers a more accessible investment opportunity with a lower barrier to entry. Important considerations. Before diving into Bitcoin, it's crucial to understand the inherent risks involved. Volatility. Bitcoin's price can experience significant swings, which can be stressful for some investors. Be prepared for this volatility and only invest what you can afford to lose. Regulation. The regulatory landscape surrounding cryptocurrency is still evolving. Changes in regulations could potentially impact Bitcoin's value. Security. Securing your Bitcoin holdings requires proper storage practices. Research secure crypto wallets and be wary of online scams. Building a long-term investment strategy. If you're interested in incorporating Bitcoin into your long-term investment strategy, here are some key steps. To your research. Before investing any money, it's crucial to understand Bitcoin and the cryptocurrency space thoroughly. Learn about the technology, its potential uses, and the risks involved. Define your investment goals. What are you hoping to achieve with your Bitcoin investment? Are you looking for long-term growth, a hedge against inflation, or diversification within your portfolio? Knowing your goals will help you determine the appropriate investment amount and risk tolerance. Develop an investment plan. Create a plan that outlines how much you'll invest, how often you'll contribute, and your long-term holding strategy. Consider a dollar-cost averaging (DCA) approach, where you invest a fixed amount at regular intervals, regardless of the price. This can help smooth out volatility over time. Choose a secure wallet. Store your Bitcoin in a secure wallet. There are various types of wallets available, each with its own advantages and disadvantages. Research and choose a wallet that aligns with your security needs and technical expertise. Bitcoin offers investors who are looking for long-term growth potential a compelling opportunity to potentially profit from. An interesting asset class, it is characterized by its one-of-a-kind qualities, its limited availability, and the possibility of causing disruptions within the financial sector. Nevertheless, keep in mind that Bitcoin is not a scheme to become wealthy overnight. Because of its high degree of volatility, it is essential to have a long-term investing horizon and a risk tolerance that can accommodate price swings. By giving careful consideration to your investing objectives and the level of risk you are willing to take, Bitcoin has the potential to become a beneficial addition to your portfolio of long-term investments. Thanks for joining me today. If you enjoyed this video, be sure to leave a like and subscribe for more content on all things crypto. In the comments below, Let me know your thoughts on Bitcoin as a long-term investment. Do you think it has the potential to become a mainstream asset class? I'll be creating more content on specific strategies for investing in Bitcoin securely and building a well-diversified portfolio. Stay tuned.